Hello everybody. So this video is entitled IREN stock. Is it the next neocloud stock to run after Nebius? And so this video will be a little bit of an IREN versus Nebius video. And I have quite a few good things to say about IREN. I must say this company has changed a lot since its Bitcoin mining days, which is roughly the last time I had covered it. So I have a lot to say about this, but the first thing that I need to say is that, as you know, I've been whining about 10x too fast stocks, and Nebius, unfortunately, I started covering Nebius around the IPO. It was in the $25 to $35 range when I started covering it, and so unfortunately, it's now something like a 10x. And I think the stock is getting ahead of itself. I think it moved too fast, too far. If you have a 10x in a matter of 2 years, that's too far, too fast. I don't know what I'm going to do with Nebius. I don't think I'm going to sell. But the point is, I still own Nebius, but I think that now Nebius is relatively overvalued. Overvalued relative to IREN. Yes, Nebius, there's a lot of things to like even more than IREN, namely the CEO, right? Former CEO of Yandex, right? The Google of Russia, tough to beat. There's other things to like about Nebius, which is their VC stakes, right? Including the ClickHouse VC stake. Some may say execution has been a little bit better about Nebius, although, I'm sure the people at IREN would argue about this. All of this could be true, and it would still be true that Nebius would be relatively overvalued compared to IREN, and very much so, actually. So I ran some sort of a crude back-of-the-napkin math. So, first of all, it's worth noting that they both have 5 gigawatts, but one of them has secured it. One of them has secured that power, and another one has that power as the projected targets, right? So, of course, Nebius is the company that is guiding for 5 gigawatts eventually. IREN has secured that power, but it just needs to develop the sites, and that's a big just, right? Because it takes a lot of effort to develop these sites. But IREN, the competitive advantage, of course, starts with power, and they have access to the power already. They just need to develop the sites. This is more work for Nebius, more execution risk when it comes to the power for Nebius, and of course, power access is the thesis behind even owning the Bitcoin miners. They bought power when the power was dirt cheap. The Bitcoin miners got access to power before power got expensive. And so a lot of the run in the Bitcoin miner stocks is because they have access to that power, which they paid, pennies on the dollar for. So that's the point I want to make. And second point I want to make is their ARR. So at the last quarter, they reported 3.1 billion in ARR at IREN. This is outstanding, and this is partially due to their NVIDIA contract and to their Microsoft contract. They signed large deals with NVIDIA and Microsoft. And they also have the backing of NVIDIA to set up next generation GPU factories or AI factories with GGX. And so they'll have a privileged relationship with NVIDIA to develop and ramp out these factories. That's very good, but that's also what Nebius has, right? Nebius also has a major investment from NVIDIA and support of NVIDIA. So in many ways, IREN and Nebius are both supported by NVIDIA, I would argue. Here is where it differs. Nebius, indeed, has guided for much faster growth by year-end 2026. At the midpoint, Nebius has guided for 8 billion ARR by year-end 2026. So the short-term growth at Nebius is actually much higher than the short-term growth at IREN. For IREN, a lot of the growth is going to come in 2028 and beyond because they are developing sites that require a lot of work, essentially, from what I understand. So current ARR for Nebius, by the way, is 3 billion. Current ARR for IREN, by the way, is 3.1 billion. So they have similar current ARR. But let's look at the ratios, at the price ratios. So for the sake of simplicity, because there is always the difficulty of the financing of these GPUs, remember, both of these companies own GPUs. So a lot of prepayments come into play with that. A lot of different ways to finance come into play with that. Dilution sometimes comes into play with that. But the point is, not sometimes, for sure. I mean, there's been dilution. But the point is what? The Nebius market cap is 75 billion, okay? And the current ARR is 3.1 billion. So we're paying 25 times current ARR for Nebius. Now, forward ARR, and I'm going to say year-end 2026, forward ARR is 9.3 times. Now, if you look at IREN, current ARR for IREN, you're only paying 5x, so 5 times cheaper. And if you are looking at the year-end ARR for IREN, the price to year-end ARR, you're paying 4 times. So this is not quite, but nearly 2.5 times. Let's call it 2.3 times cheaper, even on a growth-adjusted basis. And this is where some people could argue that Nebius guided for that enormous growth in megawatt. They guided for 5,000 megawatt as well, just like IREN, but perhaps IREN is going to have an easier time developing those gigawatts. Maybe in 2027 they'll have an easier time, and maybe in 2028 they may have an easier time doing that because of the experience, because of a concentrated team, and perhaps because they already have access to the power. They don't have to still look for it. They already got it. They already got the sites, and frankly, a lot of the sites are all in the same location, right? It's all in the same West Texas area, at least for the big sites. So there's a lot to argue about 27 and 28. But over the short term, right now, for me, it is difficult to argue that IREN is so much cheaper than Nebius, just looking at that metric. It is cheaper than Nebius. And so the big question is, how big will ARR be in 2027, 2028, and beyond? And by the way, for the sake of simplicity, I'm going to assume here that Nebius is going to be successful in securing 5,000 megawatt, and that they will develop a similar timeline, maybe as much in 2027, maybe a little more, maybe a little less, but over the long run, I have to assume that they'll have perhaps a similar timeline. So the numbers that I'm using over the very long run may be very similar for growth for these players. And I'm sure CoreWeave, I'm sure the growth could be fairly similar. The demand for compute is insatiable. The demand for these neoclouds are insatiable, and most people actually, if you follow this space, most people are going to look at IREN, CoreWeave, and Nebius as a bucket. There's an ETF that just came out as a bucket of these neoclouds, and so these three companies are different from, say, Amara or CleanSpark, who are doing a lot of colocation deals, right? A lot of the former Bitcoin miners are doing colocation deals, like TeraWulf. It's colocation deals. You're landlord. You don't necessarily own the GPUs. And the big point of the thesis that a lot of people didn't imagine was the GPUs actually went up in value, and the cost of compute actually went up in value, not down. But anyways, let's try to calculate what the ARR could be for IREN going forward. And of course, if this is very simple back of a napkin math, I'm just assuming they're going to sell those megawatts for the same price as they've sold the old megawatts, which is already a weird assumption because we know the prices are going up. So they're likely going to sell these megawatts at a higher price than what they already sold already. So at least that's what Nebius is telling us. Nebius is telling us they're charging much more for compute these days than they were even 2 quarters ago. But anyways, if you look at the progression based on a linear progression based on the power, so you're getting ARR potentially by the end of 2027 at 9 billion. So by the end of 2027, IREN could have caught up to Nebius, but remember that'd be roughly a doubling compared to year-end 2026, but the company is 5 times cheaper, right? So, and then if you look over a very, very long run, assuming they don't acquire more gigawatts, which they want to do, by the way, especially in Australia, and because they were talking about Australia being their next big move, what would they get? What would be the ARR? It could be, once they develop everything, it could be 38 billion ARR once they develop everything. And so if you want to have a crude price target, and the key is that we don't know when they will have developed everything, probably early 2030s, probably, then what do you get? You apply the current a ratio of 5 times ARR, and you do 38 billion times 5, you get a $191 billion company potentially. So that's a 13 times from here, because right now the company is 16 billion. It could be 191 billion. And that's, of course, there's a lot of assumptions. It's the assumptions that they're able to develop everything, they're able to buy all of the GPUs, and they're able to sell all of those for at least the price that they've been able to sell it in the past. and maybe they could sell it for more. So there's a lot of questions. There's a lot of execution risk. There's a lot of financing, some financing risk. I mean, I would argue the prepayments really help. There's a lot of risks in this company. I don't argue otherwise. What I'm arguing is the valuation disconnect. Even growth adjusted, you still have a company who's 2.3 times cheaper in IREN than Nebius. Even if you look at the chart, it's tough to understand. Nebius has been running so much probably because of a squeeze. At least that is my take. I think it's run up because of a squeeze. It's getting out of hand. IREN has not gotten much love, and perhaps it hasn't gotten much love because a lot of people maybe still see it as a Bitcoin miner. It's worth mentioning, IREN barely talked about Bitcoin on the call. They have entirely moved on from this Bitcoin thing. They still mine a little bit, but they've entirely moved on. Which is very sad, because my reason for selling IREN back in the day was that they didn't hold all the Bitcoin, right? But then again, we didn't think Bitcoin would be in such a long valley of despair. At least I didn't think we would get a valley of despair. I thought we were going much higher on Bitcoin. So anyways, the past is the past, right? Investing is a risky game. But let's talk about IREN. Let's conclude this video. So there's a lot, and my take, of course, is that IREN is so much cheaper, and I don't understand why it's that much cheaper for a company that is arguably part of the three, right? CoreWeave, IREN, and Nebius. They're arguably part of the three big neoclouds, which could be a category in the future. But I don't understand. I cannot explain this disconnect. Here are a few facts, though. They're both fully integrated, so they own GPUs, right? Nebius and IREN both own GPUs, right? The Nebius offering is more software oriented. IREN has more of an AI factory approach, where they contract directly with customers and discuss directly with customers, contact sales. So I don't really know, but I'm not invested in Nebius for the software side. But the fact that IREN owns the GPUs, I think vertical integration is perhaps much more important to profits than adding a little bit of software on top of it. By the way, IREN has some software, right? They bought like a cloud management company or something like that. They have some software, but these companies, they come with their own software expertise, and they can run whatever software they want on it. So it's a plus for Nebius that they have such a advanced software suite, but I don't think it's a deal breaker for IREN that they have a less advanced one. IREN, case in point, has been able to secure prestigious customers. The same customers. They don't have Meta, right? But aside from Meta, it's the same big names as Nebius has gotten, right? They have Microsoft, they have NVIDIA, and they have a lot of AI labs, a lot of frontier labs. Of course, the most famous one I can read here is Perplexity, but I'm sure FleetStack will be recognized by a few people. So they have big names, prestigious customers. They have proof that they're able to sell things, to sell stuff. And they just developed their first site and delivered their first site to Microsoft. So it is working, right? It is working. And they also have a customer prepay. So this is what I want to show you. Recent contracts include customer prepayments representing about 45% of the associated GPU expenditure. So just like Nebius, they have customer prepayments. Just like Nebius, they have some international. So Nebius is going international, but also is IREN, right? And with Spain and Australia. I would argue Nebius is just Europe, much bigger footprint in Europe. But we are going after Southeast Asia potentially with Australia and the fiber optics cable that they got over there. So that's quite interesting to me. Of course, the company is run by Australians, so perhaps it helps to go there. I'm not too sure. But and then the last thing, and I'll conclude with this. And this is kind of a wild card. Been thinking a lot about this. This is the average contract value per megawatt, and it's Nebius showing that it increased a lot, and we are now signing short-term capacity deal at 40 million per megawatt. And this gives me pause. This makes me wonder if Nebius didn't sign some of their contracts a little too early. If I look at of course the signed contracts, the backlog of signed contracts, Nebius has a much bigger backlog than IREN. Could IREN be actually signing contracts at a much higher price because Nebius already committed compute at lower prices. So I think that could be a really, really big deal. That slide, of course, in IREN's shareholder letter is very helpful and very useful to see the state of the space, which is very interesting, because they show that the prices are going up by a lot, like nearly doubling. It's nearly doubled twice, right? I mean, that was a base case, but it's going up by a lot, and yet you have a lot of cloud names, right? A lot of neocloud names, and even the colocation names, right? Those where they don't own the GPUs, but they rent the power and they rent the building and the space. They've all sold off, right? They've all sold off quite a bit, while Nebius is pumping. So is there some retail investors going on who are just selling off all of the other names and betting everything on Nebius? I don't know. I'm very happy with Nebius' performance, but it puts me in a tough spot, because Nebius did it 10x too fast, and you bet I'm definitely not adding at these levels for Nebius. So we'll see what comes of it. I think at this point, IREN is very much undervalued compared to Nebius, and I like IREN at this point. So this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.